We are going to start today's session with a conversation with Max Brickman, founder at Heartland Ventures. Max, welcome to the show.
Thanks for having me.
So Max, let's start with a little bit of introduction about your background. Let's get acquainted.
Sure, absolutely. Happy to go as in depth as you'd like me to, but I'm from Wisconsin originally, in the Midwest. Kind of got started in the entrepreneurial space early on. I bought my first property when I was like 14 in northern Wisconsin. So just I guess money from a landscaping company that I had that the one of our clients or one of our accounts, the landscaping company, was getting ready to sell their property, and so we were going to lose an account. And so I kind of foolishly raised my hand and said, like, well, what if we were to buy it? And was able to work something out to buy that, and I was able to fix it up and rent it out and build that to about 450 units throughout high school and college, and had a education startup that ultimately we licensed out, and then found myself in South Bend, Indiana, a small city of about 100,000 people. Notre Dame's there, but it's sort of it's a smaller city outside of that. Traditionally, kind of what people would classify as like a Rust Belt town. I was there because my wife was going to grad school there, and didn't really know anyone in the community, and candidly kind of went in and tried to make the most of the situation, and ended up falling in love with the city and seeing that you don't have a lot of technology companies that are based there, at least at the time. There's definitely more now. Yeah. But what you do have a lot of are these family businesses, these companies that are doing 100 million, $1 billion in revenue, that are in manufacturing and logistics and construction, that are huge consumers of technology, and are sharp folks, but sort of fly under the radar because of where they're located.
Yeah.
And so I built the fund really around those people, and these owners of these billion-dollar companies that no one's ever heard of, because those are the users of a lot of the technologies that are being developed. And so fast forward, I built Heartland. We're about 100 million under management now, raised pretty much just exclusively from around 100 of these family businesses. And so by having these companies invested in us, as opposed to a pension or endowment, we can look at a technology, and this really drives what we look at. We can look at a technology, we can do the diligence ourselves, but then take it to the customer, our investor, say, hey, is this something you all would actually use? Would you become a customer of this? Is there an ROI? And if there is, then de-risks product market fit for us. It becomes helpful for the startup of getting early customers. The RLP is getting a technology that can help their core business, and so it really is built around those aligned incentives of bringing everybody together.
Very interesting. Now, yeah. What sector of technology companies are you looking? Is it all B2B SaaS then?
Yeah, it's all B2B SaaS, really driven by who our investors are. And so technologies that can sell into manufacturing, logistics, construction, HR is a bit of a catch-all because that can sell into really any of them, but anything where we can really provide value.
And stage-wise, do you do seed, pre-seed, or Series A? What are you doing?
Seed and A, so kind of in that area where at least we believe it's most valuable to have those early customer introductions, where there is a product that's developed, but where you don't already have customer validation necessarily completely figured out, where we can be supportive with that.
So you would take a product company that doesn't have customers yet and bring them into your customer base?
Possibly, if they're sort of at that inflection point of finalizing the product, maybe they only have a few customers or just some pilot customers, and we can introduce them to our network. Yeah. If our network is excited to become a customer, then that's where we would want to invest, because we can help them get to that next jump from that seed to A phase.
And do the companies have to be also from the area, or can they from anywhere?
Not at all, anywhere. Actually, most of our investments have been on the coast, a couple international, and a few in the Midwest as well. But we want to act as that connector between tech hubs around the country and candidly around the world, and the industrial Midwest. All of these very large producers in this part of the country.
Let's do some examples of companies that you have invested in especially where you have brought them into your customers very early on. So ideally seed.
Yeah, absolutely. So a good example would be Workstream. We were one of the early investors in their seed round. Desmond Lim, Singaporean founder who moved to the US and started a company that targets the HR space, hiring hourly employees. And one of his other investors contacted us and said, "Hey, you should talk to the Heartland folks. They know a lot of, hourly employers of companies that have a lot of hourly employees." And so we met Desmond and obviously loved him and were really impressed with what he was building. But we wanted to introduce him to our network and see if other people agreed. So we, flew him out to South Bend and we connected him to, I think it was like 13 of our investors who own, manufacturing companies. I think he left that trip with 11 signed contracts.
Oh, wow.
And so we hadn't even invested yet, and he just showed his ability to prove value. And it was just incredible. And so we invested, and fast forward, he raised his Series A from Founders Fund. Keith Boyd joined his board. His Series B from Bond and Co. 2 at obviously a much higher valuation, but continues to do a lot of work in the Midwest and that.
No, I think customer introductions are incredibly valuable. So if an investor comes with customer introductions, I think that's a very differentiated value proposition. Well done.
That's what we hope to bring and what we're built to bring.
Now, how do you view this unicorn obsession of our industry?
Yeah, I guess it's kind of a necessary obsession in a weird way because of the risk profile in venture, because of the failure rate that exists. As a VC, you really do need those wins, those big wins, to offset, the zeros that are inevitable in this area.
Not
and so
if you're a small fund.
That's
a very large fund, yes. If you're a small fund, no.
Yes and no. You don't necessarily need a $1 billion exit, but you do need depends where you come in, but you do need large exit where if you make 10 investments and 4 of them go to zero, you need it has to work out where, you have a 10x or 20x that then offsets those zeros plus then returns your fees and
10x to 20x. But these micro VCs that are operating with 10 million, 15 million, even up to $50 million funds, they don't necessarily need unicorn exits to do 10x.
I guess it depends where they're coming in. If they're coming in at a
the
valuation, no.
The definition of the micro VCs is that they're coming in very early. And
sure.
So this is actually, it's an interesting, this discussion has gone on in these forums for many, many years now. And there is a distinct evolution that I have observed over time. The more money you raise, the higher the bar goes on exit. How many IPOs do happen? How many unicorn acquisitions happen? So the more money you raise, the higher the exit price and the lower the probability of your getting such an exit. But if you look at the number of VCs operating in our industry today, it's humongous. All these people who used to write angel checks have formed micro VCs. All, but a lot of them. So the number of micro VCs has ballooned. Probably the number of Series A and beyond VCs has not ballooned. That remains more steady. But the low end of the business has ballooned, and there is also a good understanding now that bulk of the acquisitions happen in the sub $50 million range. So how do you make a sub $50 million exit work, and how do you get a 5x, 10x from a sub $50 million exit? This is a conversation that I've had with a number of these small VCs. Your fund is $100 million, so it's getting more into the territory of the traditional VC scale. But I think the ones who are operating in the sub $50 million fund size, and many of them in the 25 million or below fund size, are thinking somewhat differently than the pure unicorn chasing VCs.
I tend to agree. I guess there's There's definitely a lot of opportunity for creativity in the venture space. More on the, I'm talking about for the VCs. Not, obviously there's a ton of innovation on the startup side, but to really be able to innovate and model in model types to figure out ways to make it work, to be able to get in. If you're betting on the fact that you're going to have a lot of $50 million exits, you need to get in early.
Yes.
But if you can build a model around that and
You have to build around very capital efficient principles also.
Yeah, absolutely.
Now, what about companies in the Midwest? Do you have in your portfolio? Do you have companies, interesting companies in your from the Midwest?
Absolutely, we have a couple. One, Clara, Katie Hall, the founder, MIT grad, but came back to Michigan and is targeting the HR space of basically competency-based evaluation of your current workforce. Mm-hmm. And so, she moved back in part because, again, this is where their customers are. There's a ton of, when you look at a map of, Fortune 1000 companies, like they're predominantly in the Midwest and in the Heartland. They're obviously on the coast as well, but many more than you would expect, despite, all of the venture funding and all of the venture startups being predominantly on the coast. So I think there's kind of an unfair advantage that a lot of these companies have by being in the Midwest, because you're just one of fewer, and you're going to get more attention, you're going to get more feedback, your customers are going to just be more interested. And so we're seeing it more and more. And beyond just looking at companies that we're investing in, we're seeing more and more of companies we've invested in that are relocating here or expanding, setting up secondary operations here. Yes, it's a lot less expensive than the coast, but again, to be close to their customers.
And how many, let's say, how many SaaS companies are headquartered in the Midwest or have second operations in the Midwest right now for these reasons?
I don't have exact numbers, but I mean, in Columbus, I feel like it's a daily occurrence that we're seeing companies either relocating or setting up operations here. I mean, there have been some pretty big exits in Columbus from, Cover My Meds. I guess Root Insurance has kind of come down a little bit since, but is here. There's a lot of big wins in Indianapolis. You have Exact Target, sold to Salesforce. You have a lot of multi-billion-dollar exits that have occurred here, and that's starting to lead to more and more based here.
Are we talking thousands of companies? Are we talking hundreds of companies? What are we talking?
That are based here?
Yeah, Midwest.
Definitely in the thousands. I mean, you have the Midwest. I mean, exact numbers. I mean, but you're talking hundreds of millions of people,
and great universities, big universities. So the part of, a lot of people end up staying close to their universities when they come out. And if there are opportunities within the universities, the career development officers work well with the universities and so on.
Absolutely. I mean, when you think about the largest universities in the country, OSU has 50,000 plus students. Michigan, you probably don't like me using those two schools in the same sentence as being rivals, but 40, 50,000 students. I mean, you have these massive schools that are terrific schools. The ability to hire, and that's why Intel is getting ready to spend $10 billion on I think one of the largest public-private projects in U.S. history, just outside of Columbus. They're going to be hiring 10,000 people, in part because of the talent pool that exists here.
Very interesting. What is your relationship with the universities in the area, and how are the universities playing? Like, if you look at the history of Silicon Valley, Stanford has played a very dominant role. In the Boston area, MIT has played that role, although Boston never became that big a hub to the extent that Silicon Valley became, but it's a very, very successful ecosystem. Boston has always been a very successful ecosystem around MIT. What is the equivalent of that effort in the Midwest right now?
Yeah, I think, OSU's, engineering program has more students than Yale, total. I mean, so the scale of these schools are just significantly larger than others, and so you have that scale benefit. There's certainly more that a lot of these schools can do on the commercialization side. That said, there have been some pretty major companies that have come out of that, particularly on the healthcare. I think we're seeing a lot more on, I think the Wexner Medical Center, the hospital systems affiliated with OSU is like 7 billion in revenue, and I think it's like a billion in research funding and grants per year. I mean, these are massive programs that are churning out innovation and research at a very, very, very large scale. And so particularly on the healthcare and life sciences side, it's some of the top in the world. I think the new cancer center here is going to be the second largest in the country. So just the scale of some of the things that are happening here is pretty incredible. And that's through the universities in large part.
Interesting. Very interesting. Silicon Valley's cost structure is just not sustainable for most companies. So even if you want to have a headquarter in Silicon Valley, the bulk of the hiring is not happening in Silicon Valley anymore. So it's happening somewhere else, and the Midwest is one of the places where India is happening a lot in India also. But it's happening somewhere else for sure.
Yeah, it's a fraction of the cost, and you have major pipelines of talent that's just being pumped out, that's coming out of these great schools. You have I was in San Francisco yesterday. I mean, you can there's nonstop flights all the you can get there as you need.
Yeah, very good. Well, we're gonna talk to some entrepreneurs. Are you staying for the entrepreneur discussions?
Absolutely.
Okay, let's stay.